Okay, with this video, we're continuing our discussion of ARC Section 90A, and that's for the review of financial statements. And up until this point, we have performed inquiries and analytical procedures and evaluated the evidence that we found, and now we need to get some written representations from management. And we'll learn about that here in this video, starting at ARC Section 90A.32 and going through 37. So to begin with, written representations, as they say here, are necessary in connection with the review of the financial statements, and therefore they're considered as evidence in our review. And we'll get a little bit later to what specifically is included in these representations and what exactly management is signing off as representing. But for now, we just need to know that these representations are review evidence and are a requirement of the review engagement. And so we can't complete this engagement without obtaining these written representations. And so we see here that we should request these written representations from members of management who have the appropriate responsibilities for these financial statements and knowledge of the matters concerned within them. And we see here that this written representation letter should be dated as of the date of the accountant's review report. And we'll look at the accountant's review report in future videos. And it should also cover all periods that were covered by the review. And within the written representations, they should include all of these individual representations. There's a lot of them here, A through M. And we'll briefly touch on each of these. So basically, this written representation letter is a letter that is addressed to us, the reviewer, and on the client's letterhead. And the client signs this letter claiming or saying each of these statements here in that letter. So they say that management has fulfilled its responsibilities for the preparation and fair presentation of the financial statements. It acknowledges its responsibility for designing, implementing, and maintaining internal controls. They provided us with all relevant information for us to perform our engagement. They've responded fully and truthfully to all of our inquiries, and all transactions that have occurred within the period of the review have been recorded and are reflected in the financial statements. They've disclosed to us any knowledge of fraud or suspected fraud that involves management, employees, or others. They've disclosed any fraud related to the financial statements that's communicated by employees or others. They've disclosed all noncompliance or suspected noncompliance with laws and regulations that affect the entity. And all of the uncorrected misstatements that are noted in the review engagement are considered to be immaterial individually and in aggregate. And with this representation letter, they will include a list of all of the uncorrected misstatements that they're referencing with this paragraph, and we will provide those to them as part of our procedures. They also will represent that they've disclosed to us all the known actual or possible litigation claims whose effects should be considered when preparing financial statements. They believe that significant assumptions that were used in preparing the estimates are reasonable. They've disclosed to us the identity of related parties, and they disclosed to us any subsequent events. And so these are all of the representations that are required, generally at a minimum, as required in this particular section of ARC Section 90A. But also, we can add some representations to these that we find are necessary in circumstances, and those might support the evidence that we have obtained for certain accounts. For instance, maybe the fair value of investments is of particular concern to us in this engagement, so we might add a representation that management believes the investments are at fair value and accurate. So that would be a good example of what to add. So, as we stated previously, these representations that management is repping to should be in the form of a representation letter. And so, if it turns out that management refuses to provide those representations, or that we consider the representations of management to be unreliable, for instance, if we've found them to not have a high level of integrity, we might consider this section here. And it says that if the written representations that are discussed right here, or in relation to those written representations, if management doesn't provide them, or we have a cause to doubt their integrity, making those representations unreliable, then we should discuss that matter with management and those charged with governance as appropriate. And if management doesn't provide the required representations, or we continue to doubt their integrity, then we should withdraw from the engagement entirely. So we may get all the way to the end of the engagement and prepare the review or the representation letter, and they would refuse to sign it, or we wouldn't think that their representations, that they're being serious whenever they actually sign it and provide it to us. In those instances, we should withdraw from the engagement. So we have a lot of explanatory material here, and we can go down to the sections to get some more information on exactly what to do with these management representations. It starts at A51 through 61, 62, 64, A51 through 64. So let's take a look at those sections. Okay, here we're in the explanatory materials section, as it relates to the written representations that management provides us at the end of the engagement. And referring to the importance of the written representations and their status as review evidence, we see here that these written representations could alert us to the possibility that one or more issues exists if management refuses to provide those representations or modifies them. And so making management provide written representations really puts them on the hook and gives them more of a sense of responsibility, and they consider those matters more rigorously. So regarding who we should get these written representations from, typically we will get them from a member of management who is responsible for the preparation and fair presentation of the financial statement, and typically not someone that's charged with governance because they're a little too far removed from the management. So this might be either the CEO or the CFO, and sometimes other parties, including maybe those charged with governance, if they are responsible for the preparation and fair presentation of the financial statement. So we need to have this person sign the representation letter agreeing to all of the representations. And most often this person will be a member of management because they have a responsibility for the conduct of the entity's business, and they would have sufficient knowledge to know if the financial statements are being prepared correctly. And so they would be able to base these understandings on the written representations. We see here that sometimes management might qualify these representations by saying something to the effect of that the representations are made to the best of its knowledge and belief. So rather than saying outright that they're aware of or that they believe that there's no fraud at the company or that they've made us aware of all the fraud, they might qualify it by saying something they've provided us all information related to fraud to the best of their knowledge and belief. And that would be okay if we don't think that it's being done to avoid responsibility. So the reason that we're getting these representations in written form is there's no way for us to really justify or have any evidence that management has prepared the financial statements and agreed on its responsibilities if management doesn't provide those acknowledgments and representations in a written letter. So that's why we put together this representation letter. And the same goes for the representations related to fraud. And we see here that it doesn't matter, or the size of the entity doesn't matter. We have to get this representation letter for any size company. And related to the requirement that management represents that the uncorrected misstatements are immaterial, it may turn out that management doesn't agree that they are actually misstatements. And in those cases, they might represent that they don't agree with those items, that they constitute misstatements because X. And so those may be some edits to the representation letter that management might want to add before they sign it, and that's okay. And sometimes we might want to get representations from those charged with governance related to related parties, and that might be in the cases where those charged with governance have approved specific related party transactions that materially affect the financial statements or involve management, or when those charged with governance have made specific oral representations to us on the details of certain related party transactions, or when those charged with governance have financial or other interests in the related parties or the related party transactions. Also, as we remember, the representation letter has to be dated as of the date of the accountant's review report, and that's because these written representations are review evidence. And so if the representation letter was signed and dated before the review report is signed and dated, then there is a gap of time where management didn't have to represent any of the items. And a review report is supposed to cover the time up to the date of the review report, especially for the subsequent events. And that's why we make the dates of the representation letter and the review report match. Also, we see here that the written representations need to cover all periods that were referred to in the accountant's review report, because management needs to reaffirm that the written representations it previously made with respect to prior periods still remain appropriate. So there might be circumstances where we might just say that there have been no changes to the prior period's representations, or if they are, we would make a note of what they are in the new representation letter. And next, we might come across situations where management argues that, or if management is new to the company, and they weren't present and part of the time period for which the representations cover, they might argue that they shouldn't have to represent those time periods. But as it turns out, this doesn't diminish their responsibilities for the financial statements as a whole, no matter if they came into the year, halfway into the year when it was over. They're still responsible for the financial statements over the full period, and so for that reason, they still need to provide those written representations and to sign that representation letter. And also, as we stated up in the requirements, then we might add some additional representations regarding specific items in entity's business or industry. And we're not precluded from obtaining representations regarding services that were performed in addition to the review engagement. So we might include some industry-specific representations or representations on supplementary information that's in the financial statements. and we would use our professional judgment to determine what those representations might be. And finally, there might become instances where it might be difficult for the accountant's review report date to match the date in the representation letter. For example, the person that we want to sign the representation letter is out of town or not near a computer or something like that, then they wouldn't be able to sign it on the day that we are planning to issue the review report. So in those circumstances, we may accept management's oral confirmation on or before the date of the review report that they have reviewed the final representation letter and will sign the representation letter without exception as of the date of the accountant's review report. However, we can't release the accountant's review report without the signed management representation letter. And that's because when there are delays in releasing the report, a fact may become known to us that had it been known to us at the date of the review report, it might have affected the review report and resulted in the need for updated representations. All right, now in Exhibit B, we have an illustrative representation letter that provides us an example of what a representation letter looks like and how we include all of the representations that we just discussed. So let's go down to Exhibit B and take a look at that. Okay, so here we have Exhibit B, and this is an illustrative representation letter. And so this letter will certainly vary according to individual requirements and circumstances, and it also considers that, or it assumes that GAAP is the financial reporting framework. So if there's a different financial reporting framework other than GAAP that is used, then we would need to modify this letter to reflect that. So this is a very vanilla representation letter. We might add or remove certain representations that are specific to the particular entity that we're reviewing. But anyway, so first we see here the entity's letterhead. So this is our client's letterhead because they're writing this letter to us, and we provide it to them to review and to edit if they need to and to sign. And they address it to us, and they provide a date that should match that of the review report's date. And so it says it's in connection with the client's company over certain periods, financial statements that were reviewed, the financial reporting framework. We also note here that they're only telling us about things that are material, and that they represent, to the best of their knowledge and belief, that as of the accountant's review report date, they represent all of these items. So we'll see these are basically the same as what we saw in the requirements, so we will kind of skip over these quickly. But they have financial statement representations here, and they go into a little more detail than what was up in the requirements, but if you need to, you can stop this video and read through them. And they got a little section here where it tells us we can add more representations if we want. And they also rep to the information that they provided was all truthful and everything that we asked for or needed, and that they gave us access to everything. And a few other important things that we might find necessary for them to rep in the letter. And then we got the name of the person to sign it, and those that are responsible for the fair presentation of the financial statements. And we note here that we can tailor these to the specific entity. And so that's it. At the end of the engagement, before we can issue the review report, they need to sign this letter and provide it to us.